Hi guys, welcome to my channel. So before we get started, make sure to hit that like button, also subscribe to my channel. In this video, we will talk about what is decentralized finance, DeFi. So make sure to watch the full video. Decentralized finance, DeFi, is an emerging financial technology based on secure distributed ledgers similar to those used by cryptocurrencies. The system removes the control banks and institutions have on money, financial products, and financial services. To understand decentralized finance and how it works, it helps to understand how centralized finance differs from DeFi. Centralized finance. In centralized finance, your money is held by banks, corporations whose overarching goal is to make money. The financial system is full of third parties who facilitate money movement between parties, with each one charging fees for using their services. For example, say you purchase a gallon of milk using your credit card. The charge goes from the merchant to an acquiring bank, which forwards the card details to the credit card network. The network clears the charge and requests a payment from your bank. Your bank approves the charge and sends the approval to the network, through the acquiring bank, back to the merchant. Each entity in the chain receives payment for its services, generally because merchants must pay for your ability to use credit and debit cards. All other financial transactions cost money. Loan applications can take days to be approved. You might not even be able to use a bank's services if you're traveling. Decentralized finance. Decentralized finance eliminates intermediaries by allowing people, merchants, and businesses to conduct financial transactions through emerging technology. This is accomplished through peer-to-peer financial networks that use security protocols, connectivity, software, and hardware advancements. From anywhere you have an internet connection, you can lend, trade, and borrow using software that records and verifies financial actions in distributed financial databases. A distributed database is accessible across various locations. It collects and aggregates data from all users and uses a consensus mechanism to verify it. 1. Decentralized finance uses this technology to eliminate centralized finance models by enabling anyone to use financial services anywhere regardless of who or where they are. DeFi applications give users more control over their money through personal wallets and trading services that cater to individuals. How does DeFi work? Decentralized finance uses the blockchain technology that cryptocurrencies use. A blockchain is a distributed and secure database or ledger. Applications called dApps are used to handle transactions and run the blockchain. In the blockchain, transactions are recorded in blocks and then verified by other users. If these verifiers agree on a transaction, the block is closed and encrypted. Another block is created that has information about the previous block within it. The blocks are chained together through the information in each preceding block, giving it the name blockchain. Information in previous blocks cannot be changed without affecting the following blocks, so there is no way to alter a blockchain. This concept, along with other security protocols, provides the secure nature of a blockchain. DeFi financial products. Peer-to-peer, P2P. Financial transactions are one of the core premises behind DeFi. A P2P DeFi transaction is where two parties agree to exchange cryptocurrency for goods or services with a third party involved. To fully understand this, consider how you get a loan in centralized finance. You'd need to go to your bank or another lender and apply for one. If you were approved, you'd pay interest and service fees for the privilege of using that lender's services. In DeFi, you'd use your decentralized finance application dApp to enter your loan needs, and an algorithm would match you up with peers that meet your needs. You'd then need to agree to one of the lender's terms and receive your loan. The transaction is recorded in the blockchain. You receive your loan after the consensus mechanism verifies it. Then the lender can begin collecting payments from you at the agreed-upon intervals. When you make a payment via your dApp, it follows the same process in the blockchain. Then the funds are transferred to the lender. DeFi currency. DeFi is designed to use cryptocurrency for transactions. The technology is still developing, so it is difficult to determine precisely how existing cryptocurrencies will be implemented, if at all. Much of the concept revolves around stablecoin, a cryptocurrency backed by an entity or pegged to fiat currency like the dollar. The future of DeFi. Decentralized finance is still in the beginning stages of its evolution. For starters, it is unregulated, which means the ecosystem is still riddled with infrastructural mishaps, hacks, and scams. Current laws were crafted based on the idea of separate financial jurisdictions, each with its own set of laws and rules. DeFi's borderless transaction ability presents essential questions for this type of regulation. For example, who is responsible for investigating a financial crime that occurs across borders, protocols, and DeFi apps? Who would enforce the regulations, and how would they enforce them? Other concerns are system stability, energy requirements, carbon footprint, system upgrades, system maintenance, and hardware failures. Many questions must be answered and advancements made before DeFi becomes safe to use. Financial institutions are not going to let go of one of their primary means of making money. If DeFi succeeds, it's more than likely that banks and corporations will find ways to get into the system. If not to control how you access your money, then at least to make money from the system. What does decentralized finance do? The goal of DeFi is to get rid of the third parties that are involved in all financial transactions. Is Bitcoin a decentralized finance? Bitcoin is a cryptocurrency. DeFi is being designed to use cryptocurrency in its ecosystem, so Bitcoin isn't DeFi as much as it is a part of it. What is total value locked in DeFi? Total value locked, TVL, is the sum of all cryptocurrencies staked, loaned, deposited in a pool, or used for other financial actions across all of DeFi. It can also represent the sum of specific cryptocurrencies used for financial activities, such as Ether or Bitcoin. Centralized finance today. Today, almost every aspect of banking, lending, and trading is managed by centralized systems, operated by governing bodies and gatekeepers. Regular consumers need to deal with a raft of financial middlemen to get access to everything from auto loans and mortgages to trading stocks and bonds. In the U.S., regulatory bodies like the Federal Reserve and Securities and Exchange Commission, SEC, set the rules for the world of centralized financial institutions and brokerages, and Congress amends the rules over time. As a result, there are few paths for consumers to access capital and financial services directly. They cannot bypass middlemen like banks, exchanges, and lenders, who earn a percentage of every financial and banking transaction as profit. We all have to pay to play. The new way, decentralized finance. DeFi challenges this centralized financial system by disempowering middlemen and gatekeepers and empowering everyday people via peer-to-peer exchanges. Decentralized finance is an unbundling of traditional finance, says Raphael Kosman, CEO and co-founder of Trust Token. DeFi takes the key elements of the work done by banks, exchanges, and insurers today, like lending, borrowing, and trading, and puts it in the hands of regular people. Here's how that might play out. Today, you might put your savings in an online savings account and earn a 0.50% interest rate on your money. The bank then turns around and lends that money to another customer at 3% interest and pockets the 2.5% profit. With DeFi, people lend their savings directly to others, cutting out that 2.5% profit loss, and earn the full 3% return on their money. You might think, hey, I'd already do this when I send my friends money with PayPal, Venmo, or Cash App, but you don't. You still have to have a debit card or bank account linked to those apps to send funds, so these peer-to-peer payments are still reliant on centralized financial middlemen to work. DeFi runs on blockchain. Blockchain and cryptocurrency are the core technologies that enable decentralized finance. When you make a transaction in your conventional checking account, it's recorded in a private ledger, your banking transaction history, which is owned and managed by a large financial institution. Blockchain is a decentralized, distributed public ledger where financial transactions are recorded in computer code. When we say that blockchain is distributed, that means all parties using a DeFi application have an identical copy of the public ledger, which records each and every transaction in encrypted code. that secures the system by providing users with anonymity, plus verification of payments, and a record of asset ownership that's nearly impossible to alter by fraudulent activity. When we say blockchain is decentralized, that means there is no middleman or gatekeeper managing the system. Transactions are verified and recorded by parties who use the same blockchain through a process of solving complex math problems and adding new blocks of transactions to the chain. Advocates of DeFi assert that the decentralized blockchain makes financial transactions secure and more transparent than the private, opaque systems employed in centralized finance. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.